IT earnings season has kick-started and Accenture had just posted its fresh set of results for the quarter ending on 30th of November. So please remember, Accenture starts its next year or the year from September onwards. So September, October and November, the earning for the season has been posted. And if you noticed, I was a bit busy these days and not very active on the YouTube platform because my work commitments were keeping me busy. But thanks to Sudeep, he reminded me of this upcoming event and probably he noticed my inactivity on that front. So thanks to him, here I am. I promised yesterday that I'll try to cover it. So here it is for all of you, and I know you all want to hear a lot of things about Accenture, about IT sector. Let's see. And this has direct implication for all Indian IT companies, for job market. So we should definitely look at all these aspects. I'll uncover all of them right here. If we look at the headline number, and it appears that Accenture has been racing ahead, and it seems they have some magic. They have found some great recipe of always beating market expectations for last few, at least I think 1.5 year. If you saw my Accenture versus TCS video, there was a time when when TCS was about to beat the market cap of Accenture, and it in fact surpassed that quite a few times, but the gap has widened in last 1 year at least, and this is growing by every day. So what is that Accenture doing better than probably TCS, Wipro and also Infosys? We should talk also about that element. So let's look at this number. The headline number says they earn about $15 billion revenue, and $15 billion is not a small amount. And if they are claiming this $15 figure every now and then, that means with this run rate they are going to reach $60 billion in this year itself. So from $44 billion, when if I recollect it, when Julia Sweet took over the reins at Accenture, they are growing at a rapid pace. Now they are a $60 billion company. So how is the company doing that well? The recipe or the secret lies in the inorganic growth. If you see where they are going, marching ahead of Indian competition, is they are acquiring companies every now and then. In 1 year itself, if I recall it correctly, the figures, maybe you will have to check, but I'm just trying to tell you their directions. So in last 1.5 year, they have done at least 55 acquisitions of small companies or big companies, right, of decent sized companies. And before that, in FY19 or FY20, they had done 30 acquisitions. So they are spending a lot of money on these acquisitions, and when you are acquiring a company, all of a sudden you have their revenue as your revenue. You can claim that revenue as your revenue. That is a big deal. So this is what Wipro did with Capco integration, and all of a sudden that you saw the results of Wipro looked quite different. And here on this front, TCS is lagging behind. Infosys is growing organically well. So we will not talk about Infosys, at least for this matter. We will wait for the results of these companies. But if you look at the gap between TCS and Accenture, that is growing because while TCS is bit conservative, Accenture is going all aggressive on all front to acquire all smaller companies, right? So all of a sudden you see the growth from $44 billion to $60 billion in just 2 years, which is a remarkable growth. That's what I'm hoping with the current run rate. So now let us dissect these numbers. What's important is they are growing by 26% in their high 20s, 20%. So 26% in North America, Europe 28%, year on year. That's okay. So last year, if you looked at their revenue, so let's see what was their last year revenue. Total revenue was $11.8 billion. From $11.8 billion, if you see they are reaching $15 billion in revenue, That's a big number, which is an increase of 27%. I was talking about the geographies. North America 26% growth, Europe 28% growth, and all other markets are 30% growth. And it is a decent size. If you look at 6.9 billion, which is $7 billion, $5 billion from Europe, and $3 billion from other markets. What's important is the industry groups they are catering to looks like their communication vertical is growing very rapidly, and it is overshadowing even other growth elements in their book, which is growth segments in their books like financial services, which is a big contribution. So it is $3.1 billion, and primarily maybe the 5G led investment is taking place. And if you have to find the similarity with an Indian company who is doing equally well in this segment, is none other than Tech Mahindra. And if you notice, Tech Mahindra's overall, I covered that in a separate video. If you noticed, the Tech Mahindra's total revenue comes from 40% of total revenue comes from this segment, which is communication and media and technology. And because of that, they have seen sudden bump up in their revenue. That's huge, and this is what is happening in Accenture as well. If you notice, other than that, financial service is evergreen service for segment for them, as well as many other IT companies. Public health is doing quite well. Product and resources are doing quite well as well. What's important for them is this operating margin. Normally, if you notice in my past few quarters, when I covered Accenture, you would notice we are talking always about a range between 14 to 15%. Traditionally, this is their strong quarter in terms of how profitable they are. They are doing quite well in this quarter always. This is their first quarter, right? And we need to see some booking numbers, and these booking numbers are telling us about the demand in this area. $16 billion in new booking. If you compare it with other IT service providers, they are much smaller in comparison. So that speaks how big Accenture is becoming slowly. Many of you would be interested to know the employee side of it. What's there for employee? First of all, demand is intact. That's good for employee. The numbers are rising very sharply again in terms of revenue. That speaks about the longevity of the demand period. Okay, that goes well for all of you. Last quarter, which was ending on 30th of August, their attrition was rising around 19%, and out of that 14% they are quoting, 14% what was voluntary, right? And this is now stabilizing a bit. That means probably we might have seen the peak of the attrition levels. And if you want to understand the severity of that peak, go ahead and check my Cognizant video which I posted. Probably I'll share that link over here. Cognizant reached 37% attrition level, and Accenture was 19% in last quarter. That is the headline number. In this quarter, they're saying their attrition is 17%. If we do a rough calculation, 17% of 624,000 employees turns out around 110,000 employees. Okay, that means those many people left the company. Okay, now we cannot say if it is an annualized run rate or these many people left the company in this quarter. So if it is annualized, probably 40,000 people left the company in this quarter. Okay, around 40,000. And if it is a quarterly rate, then it's over 100,000 people left the company. Before this quarter or in last quarter, they had the manpower which was 624 or 25,000 people. Now they are 675,000 people. What that indicates is, despite these 110,000 exits, they added 50,000 more. What that indicates is they hired 160,000 people in the quarter itself. Again, the rider is, I don't know how do they calculate it, whether it is annualized or the quarterly. So you can roughly calculate if it is quarterly, 40,000 plus 50,000, they hired 90,000 people in this quarter itself. That shows the kind of talent war which is happening in the IT in the IT industry right now, and Accenture is going all out for it. Now, time for some really big reveal, a bold big reveal. Accenture is very aggressive at this moment on hiring front, and the kind of deep pockets Accenture has, nobody can compete with Accenture. Let me tell you, if you have interviewed and has an offer letter, maybe there is a chance that they are going to revise it automatically. Upwards revision they can do anytime. I have seen some of you sharing your offer letter with me and telling me that just before joining Accenture revised your offer letter by 10-15% upwards and also gave you joining bonus. That tells you how Accenture will definitely make a killing in this market. No company can come up with that kind of approach where you automatically already employees are paid very well, and now you are going ahead giving them additional perks on joining as joining bonus and also revising their salaries. That's even before joining. That's crazy. I'm telling you, if you are one who have benefited with some similar thing, do not forget to probably drop me a mail. Otherwise, feel free to connect with me on LinkedIn. We should speak around that. And with that, I'll conclude, but only to tell you that in 15 days period of time, I will again cover all these IT companies, and this is a fascinating period. We must track this period definitely and see how Indian IT companies compete with that kind of approach. See you in the next video. Take care and stay safe.